For every £1 of economic activity in the UK, the government collects roughly 37 pence in tax. This adds up to around £700 billion each year, which would be the equivalent of about £11,000 per person if the bill was split equally. The question is, where does all this money come from? And how much are you chipping into this pile? Let's imagine that this pie is the government's total tax revenue each year. The biggest chunk of tax revenue, around 40%, comes from taxes on people's incomes. This includes both income tax and national insurance contributions. If you're an employee, this is the money that comes out of your payslip each month. So where is the rest of the money coming from? Well, about a quarter of the money comes from taxes on things that people buy. This includes VAT, which is raised on most things we buy, from pens and chocolates to cars and fridges. It also includes some specific taxes, for example those on fuel, cigarettes and alcohol. Together, taxes on income and consumption account for around 2/3 of tax revenues. The government gets another decent-sized chunk from taxes on property. Now, you're probably familiar with the council tax. That's the tax that most of us have to pay to live in our homes. But the government raises just as much money from a similar tax on businesses called business rates. The government gets a 7% slice from corporation tax, which comes from company profits that are made in the UK. There are a bunch of other smaller taxes, including those levied on the value of some assets when they are bought, sold or passed on. And finally, there are other sources of government revenue, like rent on government-owned buildings. As you can see, tax affects all of us in some ways because there are taxes on the income we earn, the goods and services we buy, and the places we live.